No, that wasn't Knick Knack Paddywhack. That was me Chinese, me play joke, me go pee pee. That's what that was. Zero hedge. Unprecedented housing bailout revealed as China property sales drop for the first time in 30 months. Back in March, we explained why the fate of the world economy is in the hands of China's housing bubble. The answer was simple. For the Chinese population and growing middle class to keep spending vibrant and borrowing elevated, it had to feel comfortable and confident that its wealth will keep rising. However, unlike the US, where the stock market is the ultimate barometer of the confidence-boosting wealth effect, in China it has always been about housing. 3/4 of Chinese household assets are parked in real estate, compared to only 28% in the United States, with the remainder invested financial assets. Beijing knows this, of course, which is why China periodically and consistently reflates its housing bubble, hoping that the popping of the bubble, which happened in late 2011 and again in 2014, will be a controlled, smooth landing process. The other reason why China is so eager to keep its housing sector inflated and risk bursting bubbles is that, as shown in the chart below, in 2016, the rise of property prices boosted household wealth in 37 Tier 1 and Tier 2 cities by, that's the RMB, 24 trillion RMBs, or renminbi. Almost twice the total local disposable income of RMB 12.9 trillion. For any Fed readers out there, that's how you create a wealth effect, fake as it may be. Unfortunately for China, whose record credit creation in 2017 and certainly in the months leading up to the 19th Chinese Communist Party Congress, which started last week, has been the primary catalyst for the global coordinated growth. The good times are now again over. And according to the latest real estate data released last week, property sales in China dropped for the first time since March of 2015, or more than 2.5 years, in September, and housing starts slowed sharply, reinforcing concerns that robust growth in the world's second largest economy is starting to cool. Just had a song pop into my head. You know it's too hot, too hot, too hot. Even though it said it's starting to cool. I don't know why. Property sales for actually by floor area fell 1.5% in September from a year earlier, compared with a 4.3% increase in August and a 34% jump in September 2016, according to Reuters calculations based on official data released on Thursday. That marked the first annual decline since the start of 2015. Separately, new construction starts by floor area, a volatile but telling indicator of developers' confidence, rose just 1.4% in September on year, slowing from a 5.3% increase in August, according to Reuters calculations. The negative September sale number shows that unequivocally the property boom has peaked. Rosilia Yeo, a property analyst at Gavakal Dragonomics. No. You do not work for a company called Gavakal Dragonomics. Puff the magic dragon lived by the sea. He didn't like the economy. Wow. Dragonomics. Well, you know, Chinese dragons, you know, that old chestnut. We have seen some big rebounds at the end of the first and second quarter, but given how fast the sale numbers are declining, we expect no big rebound this time. Echoing our concerns above, Reuters writes that real estate, which directly affects 40 other business sectors in China, is a crucial driver for the economy, but also poses a major risk, as Beijing looks to tame soaring home prices without triggering a crash or a sharp drop in construction activity. Well, hold on a second. This is the same country, someone correct me if I'm wrong, that has ghost towns, ghost cities, ghost malls, just to keep that construction going and building stuff, and nobody's there. Literally, ghost towns, ghost freaking cities. Now, see, towns, it's a little small town. Ancient old western town, old west town. Ghost town. No. How about a freaking ghost city? There's Mongolians take down my city wall. Goddamn Mongolians. I was from South Park, in case you didn't know what that was. The easing in property activity appeared to drag on broader growth in the third quarter, and as many economists predicted, China's GDP rose 6.8% in the third quarter from a year earlier, down from just a tenth higher, 6.9% in the second quarter. And while property investment did rise 9.2% in September, picking up pace from an expansion of 7.8% in August, analysts warn such investment usually lags sales trends by up to 6 months. Still, as discussed here previously, while home prices have sharply softened in China's biggest Tier 1 cities in recent months in response to a flurry of government cooling measures, property bubbles are still a threat in other parts of the country. A flurry of small cities have had to unveil fresh property curbs in recent weeks after speculators turned their attention to less restricted cities that have massive overhangs of unsold houses. Moreover, in addition to many buyers purchasing second houses on credit, as Deutsche Bank pointed out last month, high prices are forcing many home buyers to take on more debt, weighing on the future household consumption and leaving banks more exposed to any property downturn, even as Beijing looks to rein in financial system risks. Household loans, mostly mortgages, rose to 374.9 billion won, 110.80 billion US dollars in September from 665.5 billion won in August, despite rising mortgage rates. According to Reuters calculations, short-term loans also soared in the third quarter, suggesting speculators may be trying to circumvent property cooling measures, some economists have said. What is most concerning, however, is that the recent sharp decline takes place even as policymakers have made stabilizing the overheated property market a top priority ahead of a critical Communist Party Congress this week, reiterating the need to avoid dramatic price swings, which they fear could threaten the financial system and harm social stability. ADN, or maybe he meant and, while a downward inflection point in China's housing market, which accounts for a third of China's economic growth, is bad, what follows is far worse. According to a fascinating new Wall Street Journal report, China's housing downturn is likely far worse than meets the eye, as under Beijing's direction, more than 200 cities across China for the last 3 years have been buying surplus apartments from property developers and moving in families from condemned city blocks and nearby villages. China's housing ministry, which is behind the purchases, said it plans to continue the program through 2020. The strategy, supported by central government bank lending, has rescued housing developers and lifted the property market. Right, so, what did that say? What was the key here? This sounds like the Democratic move of epic proportions, right? China, for the past 3 years, has been buying surplus apartments from property developers and moving in families from condemned city blocks and nearby villages. Let me ask China a question as if they could actually answer. Condemned areas, in villages. You think these people are paying rent, mortgage, anything like that? Not a chance in hell, right? So government, as usual, democratic style, we'll give you everything you want for free, just vote for us. Just pick us, etc. Except this is communist China, a little different over there. But nonetheless, same thing. Oh, all you that have to work hard for your money, so hard for your money, so you better treat us right. Nope, keep paying your taxes. Matter of fact, they're going to raise a little bit. No tax breaks for you guys. Some of the stuff you would like to write off, can't write off anymore. You know, that old chestnut. We got to pay for the villagers and the condemned people, apartments people living in. You know, someone's got to foot that bill. We're printing the money and buying it, but someone owes it, and that's you. And I'm speaking to people in China this time. You might have thought I was talking to you people in America, because that's how we roll over here. too. At least on the Democratic side, that's how they roll. But no, this one's China this time, actually. Quick look surprise. This one's actually China, not something about America. As the Wall Street Journal notes, the latest backdoor bailout is a sharp illustration of China's economy under President Xi Jinping and the economic challenges he will face as he renews his 5-year term at a twice-a-decade Communist Party Congress that opens on Wednesday. Rosilio Yeo from, again, my favorite, Gavical Dragonomics, who was also quoted above, wrote that, quote, the government's creativity in coming up with new ways of supporting the housing market is impressive, but it's also an indication that it still depends on housing for growth. While traditionally China's government used to build homes for families who lost theirs to development or decay, last year, local governments from the Northeast Rust Belt to the city of Bangbu, hey Bangbu, that was Yogi Bear calling for Boo Boo, with 3.7 million amid the croplands of Central and Hoi province, spent more than $100 billion to buy housing from developers or subsidize the purchases, according to Gavical Dragonomics. In other words, the reason why China no longer has ghost cities is, well, what did I say earlier? Ghost cities. They've been moving these people in and I haven't even, under the radar, under my nose? I thought they were still ghost cities. Nope, I guess not. In other words, the reason why China no longer has ghost cities is because the government is buying them in just as concerning ghostly transactions. The underlying structure is yet another typically Chinese Ponzi scheme. Underpinning the strategy is a cycle of debt. Cities borrow from state banks for purchases and subsidies, then sell more land to developers to repay the loans. As developers build more housing, they too accrue more debt, setting up the state to bail them out again. The burden on the state rises, as does the risk of collapse. Does this sound familiar anywhere? Quantitative easing. What are you buying with that quantitative easing? Some treasuries and some other stuff. Talking U.S. now. Treasuries and other stuff. What other stuff? What other stuff are you talking about? Mortgage-backed securities. Oh, those turds. Those stinking piles of poo-poo. That's what you're buying at, right? So we're doing the same thing, just in a little different fashion. Bailing out who? The banks. Who have more debt than they've ever had. Who are bigger than they've ever been, right? This problem's not getting better, it's getting worse. Recovery. 3 years ago, Bangbu's housing prices were falling. Housing inventory in 2014 would have taken almost 5 years to fill at the pace of sales at the time, said Shanghai-based research firm eHouse, China R&D Institute. Well, that's better than Dragonomics, I gotta admit. Around the same time, the Bangbu government began to gobble up homes, and it has continued to do so. The city said it bought nearly 6,000 apartments from developers last year. Housing stock in Bangbu was down to 4 months in September. A city official overseeing the government program said in September, home prices had increased by 15% in August from a year earlier. That exceeded the 8.2% growth across a benchmark of 70 cities compiled by the National Statistics Agency. Again, so poor people move in, subsidized, or just paid for outright. You hardworking slave, taxpayer, you're paying for this. You're going to pay for this. And you're simultaneously paying for your own house because you don't meet the requirements for being subsidized. Okay? That's how that works. And again, this is China. Yet, we hear the same stories elsewhere, Western world. Beijing and Shanghai residents are used to such price surges, but it is unusual in a smaller Chinese city lacking any particular tourism or job market appeal. Naturally, China would rather not have details of its latest bailout program spread too far. Bangbu officials are worried about publicizing its hand in the market for fear of driving up prices. Well, that's exactly what's happened, of course. And speculative buying, that's also what's happened. We don't mention it as much now as in the past 2 years, the city official in charge of the program said. Prices have been fluctuating a lot, and it's a little bit out of control, he said. Control. Since the launch of the program, which is an explicit subsidy to Chinese real estate developers who are directly selling to the government, things have predictably normalized. In fact, the outcome has been a little too frothy. In 2015, groups of families on government-organized apartment tours started showing up, said Ding Quinn, a planner at the developer Bangbu Mingyan Real Estate Development. By October 2016, the developer had sold 20 blocks of finished apartments, about 10% of them paid for with government funds. Miss Ding said. Miss Ding. Is that her middle name? And is her last name by chance Dong? No, that was a horrible joke. We have run out of apartments to sell, she said. The developer has sped up construction of 42 new blocks, about 4,000 apartments, and has raised prices by 40%. Well, what do you think? Raise the prices. The government's buying it all. So you get to raise your prices, the government's going to buy it for free. But the average person who then has to buy the house, paying 40% more. Or the apartment paying 40% more. But some of them may be subsidized or paid in full. Villagers, come on in, villagers. You have nothing. We don't expect you to pay. Again, we got taxpayers. They'll pay. Don't worry about it. Don't worry about it. What is most frightening is that despite the decline in property sales, the government's role in the housing market continues to grow, according to the Wall Street Journal. And here's a stunning statistic. Of all the residential floor space sold in China last year, 18%. 18 in life, you got it. 18 in life to go. Your crime is buying houses and 18 in life to go. I probably shouldn't add that one. I think I've done too many of those in this video, to be honest with you. But I'm not editing it. I don't have time for that. Of all the residential floor space sold in China last year, 18% was purchased by government entities or with state subsidies. eHouse China determined from official government data. The share could reach 24% this year, the firm said. To paraphrase, Beijing is now the covert, marginal buyer of a quarter of all Chinese real estate. That, in itself, is a mind-blowing statistic. And what is scarier is that despite this implicit backstop, property sales are once again declining after 30 months of increases. And again, they should have been going crazy high. Why? Because the government's buying everything. Oh, what, it doesn't matter. There's no fee. There's no. We have unlimited money. What do you want for this stuff? We'll buy it all. Don't worry about it. And now it's declining, even with the big whale. The whale, so to speak, buying it up. One can only imagine the epic crash that would ensue at this moment if, for some reason, the government bid were to be pulled, and just how spectacular the ensuing global depression would be as the rug is pulled from below the middle class of the world's fastest growing economy. Good day, sir.